Have I ever told you how much I love Bank of America? And Citigroup, JP Morgan, Goldman Sachs, Wells Fargo. Have I ever told you how much I really like those guys? So much so that I'm not paying my mortgage to Bank of America because of the fraud I uncovered, the gaping hole in the note chain of title. You know the story, I've mentioned it many times. So whenever I see a big bank like Bank of America get one shanked right into the side, it feels great. It makes me happy, it makes me smile. I love it. Looking at the stock market for the last 2, 3, 4 weeks at the big bank stocks led by Bank of America on the plummet side makes me feel good. So, I'd like to read you a little something from goldentruth.com, and I believe it was posted by Dave from Denver. Is another big bank collapse brewing? Before I read the article, I'll go ahead and answer that. Hell yes, 100%. End of discussion. Now I'll read it. Take a look at the financials today. Literally today, the day I'm making this video. The BKX Bank Stock Index initially spiked higher with the Dow and SPX this morning and has since faded into negative territory today. Almost every big bank stock that I track is in red. Bank of America stock opened briefly to the plus side and is now down over 6% as of his writing. Despite the half-assed salesmanship on behalf of Bank of America done by its lame CEO last week, Bank of America is in an irreversible death spiral. Bank of America credit default swaps, or CDS, right? Credit default swap, these fancy things that were created not that long ago, which were death sentences by creating these derivatives and credit default swaps and all that crap. But anyways, Bank of America is in an irreversible death spiral. Their credit default swaps are trading plus 342 basis points above Treasury bonds, indicating a mid-double BB implied credit rating, which means junk bond status. So in this case, it's not a bond, junk credit rating, you could say. But the real story in the banking sector is about asset quality or lack thereof on the big bank balance sheets. Everyone knows that for most of the last 2 years, the big banks like JP Morgan and Wells Fargo have generated most of their GAAP/accounting earnings by marking up the carried position of the largely illiquid assets they hold on their balance sheet. And now that the quote mark 'em up game has run out of room, the same banks generated accounting earnings last quarter by reducing the size of their reserves held against loan losses. Please note that both games, the markup game and the loss of revenue release game, or excuse me, the loss reserve release game, the earnings are nothing more than paper earnings and do not generate cash or reflect true economic rent. Or in other words, economic rent is otherwise known as cash profits. And I'm going to stop there for a second because I got a letter about a month ago from my favorite, We Are Bank of America, BAC LLC, subsidiary, blah, 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 Bank of America loan service. Oh, it's not the same crap letter I get that says we are the servicer of your note to note holder. Which I have to tell you this over and over again because there's always new subscribers that never heard my story. But I'm not going to go into the whole story other than this stupid letter that it's like an automatic mail out letter. No, it just happens. We are BAC LLC, whatever, loan services. We are the servicer on your mortgage note to note holder. Who is note holder? Doesn't it need to say note holder and then the person's name or company's name, etc.? well, we just put that in because it's probably an investment group or different investors. We can't give you that information. But if that's who I'm paying this note or mortgage to, I think I should know who I'm paying to make sure they're not out of business. Or are they the ones who really own the note? I'd like to know that. You're going to have to sue us, sir, to find that out. No. I've got a better idea. Are you taking notes? Yes. And then I went on to give him my spiel of why I'm not making any more payments. And they have not called me back for months now. Many, many months. Since I told them that. Which I'm not going to repeat the whole thing again. I don't have time for that. So this is a new letter I got. BAC Loans, Inc., LLC, whatever. We are notifying you that we are basically selling your note to somebody else. Remember how they repackaged them? Sold them off, repackaged them again, sold them off to someone else. You may have got 3, 4, 5, 6 notices in your mailbox. Some people telling me less than a month would go by and they already got another one before they could even finalize the other one and make the first payment to that loan company who bought their mortgage. That quick. It's just crazy. That's the part I'm talking about. There was some fraud uncovered there and the gaping holes in the chain of title. Nobody signed off whenever they'd package these and give it to the next guy. That's a key issue. So this one is saying we just did that. It didn't say package it, but we are no longer going to be servicing your loan. This new company is going to be servicing your loan. Please make payments to this new company. The same standard note we used to get, a few years ago when the crisis started happening. Oh, wait a minute. Who's this company they're selling it to? BAC, basically the second, Loans. Subsidiary of the first Bank of America Loans. Oh, I know what that means. Shit assets. Trash assets. Mortgage-backed garbage. That's what this is. It's a junk piece of crap asset. Like all the assets they have. Again, what he's talking about, they have these, the bookkeeping says they've got all this profit and our assets are worth, hundreds of billions of dollars or $1 trillion, whatever the hell it's worth. And we've got all these assets, but they don't want anyone to look at the assets. They've been trying to dump the assets on Fannie Mae and Freddie Mac, who recently just pushed back at Bank of America and said, take that shit and get it out of here. We tried to help you, but holy shit. We can't take this. And they refuse to take any more of those types of assets. I just did a story on it a little while ago. So, now what? Now they have to get it off the balance sheet. We can't have this non-performing shit assets. We've got to have real assets. And if we keep this on our books, the cat's out of the bag. Okay, create a new subsidiary. Call it whatever the hell you want. BAC, the Second Power Loans, Inc., LLC, whatever. And then we'll offload it to them. Which is really offloading it to us because we are them and they are us. We just created a new entity to shift this crap off our balance sheet onto a new company. And then we don't have to report on it. Hey, look, our balance sheet's cleaned up. But then this company over here, you've got trash on your balance sheet that belongs to Bank of America, and you are a subsidiary of Bank of America, which means you're Bank of America. But it's a way of them to get it off the main Bank of America balance sheets for about a year or so. And then when that time comes, this company, our time's up, dump that trash on another subsidiary, Bank of America. Yeah, roll the new subsidiary. BAC Loans LLC, the Third Power. Just give it some name. Dump these assets over there so we can clean off that balance sheet. And maybe even dissolve the company because it won't be needed anymore. It's just a subsidiary anyways. And it's hot potato. Here's a pile of stinking cow shit that we're going to call hot potato and we'll pass it to the subsidiary. You got it? Okay, good. Hold on to it for almost a year. Right before you have to report your earnings and your balance sheet and everything to the whole world and the federal government, right before you do that, we're going to let us know, we'll create a new subsidiary, and then you pass that stinking pile of crap to the next guy. Yeah, no problem. We know how to play that game. All right, good. Okay. So that's how that works. So let me continue reading this. What got me thinking that we may be heading toward another credit collapse, like in 2008 again, is that I had noticed that the stock of MGIC, or MTG, which stands for mortgage, was down like 18% one day last week and has taken a 66% beating since July 15th of this year. MTG, which is what he's talking about, this company, this stock, provides mortgage insurance to the home mortgage. So companies like Bank of America, Citi, not Countrywide anymore, but mortgage companies, so to speak, put out get insurance so that if we get into some trouble with these people not paying back mortgages, or there's some kind of issue here, we go to claim the insurance, and that'll help us. And what he's about to say basically is that there's not enough help in the world financially that any of these insurance companies, even if you combined all of the insurance companies on the face of the planet, they couldn't come up with enough money to insure the crisis at hand. So let me continue. MTG provides mortgage insurance to the home mortgage, primarily single-family home mortgages. And the stock of MBIA, or also known as MBI, was hammered last week and is down over 40%. So that's two companies. One's down 66 since July 15, and this one was hammered last week and is down over 40% also since July 15. MBI provides insurance for municipal asset-backed, such as credit cards, cars, student loans, housing, and mortgage bonds. And AIG stock, which we're all familiar with, despite being heavily supported by Timothy Geithner and the Fed on behalf of the U.S. taxpayer, was hammered last week and is down over 21% since August 3rd, 3 weeks ago. A large component of AIG's insurance business is residential mortgage guarantee insurance. Although it's next to impossible to get any kind of truth reported by our nation's leaders, corporate leaders of the or the media, it is hard over the long run to hide the truth from the stock market. And right now, the stock market is telling me that the big banks, led by one of my favorites, JP Morgan is one of my favorite too, led by Bank of America, are in trouble again. And two, the root of the trouble is the poor quality of assets. Again, assets, they're calling it an asset. But if I craft out a rotten, stinking pile of mushy turds and told you I had an asset that I want you to come in here and see, when you open the door, before you even saw it, you would know you've been lied to. Major fraud by Joe. You tricked me. That is not an asset. That may have came out of your ass, but is not an asset. Or is it? So, on paper, we've got all these assets. Under a microscope, show me one of these assets. What the hell is that? That's a piece of garbage. You couldn't sell that if your life depended on it. It's not even worthy. You can't call it an asset. Well, we can on paper. And that's what we do because we're the big banks and we just pass the paper around. Hot potato, hot potato, hot potato. Who's got it last? Oh, 2008. Market crash. Oh, or not. Market did crash shortly after that, down to 6,600 or 6,700, the Dow. But major bank crash. All the economy crashed. Hot potato, hot potato. And now we've dumped all these trillions, which amounted to, again, Senate investigation just recently, Bernie Sanders. We've already uncovered $16.5 trillion that was created by the Fed. Not 2 or 3 or 4 or 5 trillion. $16.5 trillion. Now let's play hot potato again. Yeah. So what do you suppose is going to happen when that hot potato is stuck in the last guy's hand? And that last guy's hands, by the way, is a group of guys. Bank of America, Citigroup again, JP Morgan, Deutsche Bank, Wells Fargo, you name it, etc., Goldman Sachs, all of them. And I don't know that there'll be another bailout this time. They may do it. We'll get scared again. We need a bigger bail than last time. I don't think the people will put up with it again this time. I really don't. If they do, I'll even as much as I know they're sheep, I'll still be shocked if they put up with it again this time. and Congress can still get it passed this time. I just don't see it happening. But let me continue reading. And I could easily be wrong, trust me. What the webbot has forecast for financial doom and gloom, and besides just financial, just major doom and gloom coming to a world near you in the near future, would kind of need some support by them doing just such a thing. Let's go apeshit, let's print 50 trillion, and we'll put out the fire. Only to find out a year later the fire's back. Something like that. But again, maybe not. Anyways, let me continue. So, although it's next to impossible to get any kind of truth, I've already been there. Okay, so I was on number 2, his reason. The root of the trouble is the poor quality of the assets held by these banks and is rapidly deteriorating. The fact that the stock price of the big mortgage insurance companies is getting hammered reflects the expectation that companies are going to be on the hook soon for some huge losses by the holders of the insurance. So in other words, Bank of America, all these people holding these trash mortgages and other assets, not just mortgages, other garbage assets, they're going to come to the final day of reckoning. Okay, they're trash assets, they're collapsed, we need to go file an insurance claim. And again, there's not enough money. But that's what they're saying. When you see the insurance companies that insure those types of things, stock getting hammered and slammed down, that is a precursor, if you will, event. Open your eyes and listen, open your ears too, listen. That's the sound of better get out now before you can, because that shows that the market or world or whatever you want to call it is saying, we know there's going to be massive losses on these insurance companies, potentially enough to bankrupt all of them. Therefore, is the United States government going to come to the rescue, not just AIG this time, but 3, 4, 5, 6 other major big insurers to pay off, again, these banks who have been holding this trash assets, who aren't actually asking for anything in return other than, we paid for insurance, we just want to file the insurance claim. Oh, well, there's not enough money there. And what would be nice is to just say, you know what, no, the insurance, pay all you can, you're bankrupt, have a nice day. Bank of America, Citigroup, JP Morgan, you got some of that insurance, still ain't enough to help you guys one bit. Have a nice day, you all collapse too. That's how this should end. That's how I hope this ends. So, the fact that they're getting hammered reflects the expectation that companies are going to be on the hook soon for some huge losses by the holders of the insurance, which are, again, the banks. The holders of the insurance are, in large part, the big banks who still have a lot of impaired and defaulted mortgages and other asset-backed garbage on their balance sheets. Just like in 2008, it would be my expectation that the mortgage insurers will never in this lifetime be able to pay out the enormous claims that are going to be issued against the insurance that they've underwritten. This is exactly what happened in 2008 with AIG before Timmy Geithner and Hank Paulson and Bush and Obama stepped in, used taxpayer money to pay off the enormous credit default claims in 2008. Clearly, based on the performance of its stock, Bank of America is in the worst position right now. That feels so good. Can I repeat that sentence just because it makes me feel good? You won't mind. Clearly, based on the performance of its stock, Bank of America is in the worst position now. Which makes sense since the Paulson and Bernanke tandem stuffed Bank of America with Countrywide and Merrill Lynch. Both of those firms were among the most aggressive originators of subprime mortgages and other subprime garbage in the case of Merrill Lynch. Those companies were shotgun married off to Bank of America. And again, same with Countrywide. The other big banks that I would expect to see thrown against the ropes of illiquidity, again, are JP Morgan, Goldman, Morgan Stanley, Citi, Wells Fargo. If I have time, I plan on dissecting Wells Fargo's balance sheet and seeing what's really going on there. One, because I hate Warren Buffett. He's completely hypocritical, disingenuous, and a scumbag. And two, John Paulson has recently added to his John Paulson has recently added to his big position in Wells Fargo, even after he got his ass kicked in the stocks of Bank of America and Citi. I am betting he is going to eventually have to regurgitate his Wells Fargo stock just like he did recently with Bank of America and Citi. I will agree with that 100%. At any rate, I ultimately think we are going to see another big bailout of the banking system. But more on that at a later date. In the meantime, here's some charts for you for your viewing pleasure, and you can click on each chart to make them bigger. Again, he thinks there'll be bailout number 2. Really, really, really big bailout number 2. You thought the last one was big. Oh, no. You thought the $16.5 trillion that we just uncovered from the Fed was big. Oh, no. This will be much bigger. That's what they're saying, what he's saying. I don't know if I'm 100% with that. I could easily see it happening, so don't get me wrong. And being that the banks own the government and run the government, what they want, they will get. So chances are they could get bailed out. But because this has already happened, we were already promised the world, if we do this, it'll fix it. Even if it's a slow recovery, this is the problem solver of all problem solvers. There's no way they're going to be able to face the American people and say, you know what, we made a mistake. We didn't do enough. We need to do massive now. I don't think they could face that. I really don't know. I think Congress will finally get the picture, at least enough of them to where they won't be able to pass any laws to make this happen. May get the picture through their head, finally. We have to let these collapse. This is incredible. This is insane. You can't promise me any earmarks or fluff in any bill. I don't want it. There's no way I can do this. I can't possibly face the American people. But then again, the opposite side of that says, what the hell do they care? Give me my campaign money. Remember Friday, Debo? I won. Give me my money. You what? I lost. I'll vote for that. Give me my campaign money. You what? Oh, I won't vote. No, they will vote. So let's look at some of these stocks real quick. We have MTG, which is that mortgage insurance company. That looks pretty healthy, doesn't it? I bet you want to put... I think I just read your mind. I bet you want to call your broker tomorrow and tell them to put your 401k into MTG. Don't you? Don't lie. This is a buying opportunity. Hey man, $1.76. It's a buy opportunity. You can make big ones here. Yeah, right. Get that crap out of my face. Next one, MBI, another insurance company. Well, that looks real healthy, especially right from here to here, doesn't it? Just a month's time. Yeah, there's going to be a recovery. I'll hold my breath on that. AIG. Oh, big old AIG. Yeah, big bailout. They're up here at $40, $41. Just March 7th. And we are down to $21.89. Yeah, it looks real good. Again, that's a good sign of recovery. Makes me happy. Oh, what's this? What insurance stock is this? No, wait. Tricked you. It's gold. Yeah, it's gold. March 7th, we were down here around 1420. Today, or at least as of this writing, $1,891. Massive increase. And as of this video, gold was sitting on $1,907 just moments ago. So, you probably thought for a second, oh, hey, there was a good one. There was a good insurance company. No, tricked you. That's gold. I could post a thing of silver, and it would look very similar to this, too. Of course, you'll see the little up, $50, and then down April 1st, or whatever, and then it goes back up like this. No worries. Again, silver will be back to $50 before the year is over. It'll be back to $50 here shortly. And from there on, the next move, as Lindsey Williams said, will be $75 to $100. Now, this does not take into account what Venezuela has just done by saying, give me, I don't even know what his amount of gold is. It's like 100 and something, I think, tons. He had 99 tons either with England or with us here in America either at the Federal Reserve or somewhere. And then he had like another 100 somewhere else in England or whatever, the opposite, vice versa. That, again, is a big chess move, and here's why. And he actually explains it in this article a little bit over at Harvey Organ's website, his blog, where he says the metals market, the paper market, gold and silver, especially silver, but he claims gold too, they are leveraged pretty much for sure 100 to 1. So if you're a customer like old Chavez in Venezuela, and you've got 200, let's make it easy math for right now, 100 tons of gold sitting over there in these vaults that's been there for years. Just like the example I gave you for a few hundred years ago, they did the same thing. Fractional reserve banking was thus created by fractional reserve gold lending and leasing hundreds of years ago, which led to their bright idea, we could do it with gold, we could do it with paper money. And what they do is, old Chavez has 100 tons here, great, we can issue more paper stocks, futures contracts and whatnot, ETFs, on the gold market, and we've got the gold back right there. We're leasing it. Chavez doesn't realize it, but we're actually leasing his gold out to the COMEX, to the LBMA, right, to these guys, and they're creating these pieces of paper. But because of fractional reserve lending and fractional reserve whole world, you might as well say, everything's fractional reserve, they didn't just say, well, we only have 100 tons, so let's only create 100 tons worth of paper to back that 1 to 1. No, there's not enough money in that, although there's plenty. No, we got to leverage it 100 to 1. So his 100 tons times 100 is what that equals. 100 times 10 is 1,000. 100 times 100, 10,000. So, if we have 10,000 tons of gold out in the marketplace, but old Chavez really only had 100 tons, and unbeknownst to him, the big banks, the big banksters have been playing with his money, leverage, like they do all of us with all of our money in the banks. They leverage it. You go into a bank, here's $1 million. I'd like to keep $1 million in your bank. Great, nice to have it. Folks, this man just walked out. We can start loaning out immediately up to 9, 10 times that value right away. We can now make $9 million, $10 million loan out, or multiple ones up to $9 or $10 million. And stay within the guidelines of fractional reserve banking. But that guy who put the $1 million in our bank account, we're only going to give him 3%. Meanwhile, we just have the capability of making 900% or 1,000%. We're going to give that sorry son of a bitch 3%. And that's a good rate, right? That's a good rate. Most banks don't pay 3% in a checking account. Nah. This is absurd. So the same thing's happening with gold. So when Chavez just said, give me my damn gold, and again, it's more than 100 tons, but I'm using that for simple math so you understand where I'm going with this. He takes his 100 tons back. Those pieces of paper, 100 times the 100 tons, there's 10,000 pieces of paper that were all backed by 100 tons, if you will. So there's 10,000 of one thing backed by only 100 of that other thing, for layman's terms. Now the 100 is gone, erased, see you later. There's 10,000s of pieces of paper that still say, at least there's some physical gold over there that backed us. Even though it was leveraged 100 to freaking 1, there was still at least a tiny bit there to play ball with, so to speak. Now he just removed that, and now you have all these pieces of paper that are backed by nothing, which is causing some problems for these banks. So when sovereign countries like old Chavez and other places, the big guys, the big commercial positions, start demanding, give me my gold back. You guys have had it for all these years, and I just paid you the security fee. Give it back. All that they're taking is what's theirs, rightfully theirs, and leaving the banks with nothing but paper that's backed by nothing. What this will lead to has to be a default on the COMEX and or LBMA or both. But again, before these types of things happen, the bankers are well aware of it because they know exactly what they have and what they don't have, and they know exactly what paper's out there and what's not, and who's demanding delivery and who's not. Therefore, they will know in advance, hey, call up our boys in Congress, in the COMEX, the Security Exchange Commission, the CFTC. Listen, boys, we need to change the rules mid-game. We need to change the rules again in our favor mid-game. And I don't know what those rules would be if they try to attempt that. But I don't know what they could possibly do anyways. If they don't have the gold and they have all these paper contracts, what could they possibly do to remedy the situation? One thing I can tell you is everybody with the paper contract, because there's been gold shortages and there's a major problem, and they're not going to tell you that they we're leasing old Chavez gold and that's why. It's simply we had a major error in the bookkeeping of all of the exchanges somehow, at least in regards to precious metals. We have to shut them down, and everybody who has an open contract right now, paper contract, we are giving you today's market price in cash, and your contract is null and void. Have a nice day. That's probably how it would play out, but again, I don't know for sure. You never know what these people are capable of doing. They may, again, pull off a 9/11 type of event right in downtown Chicago. See you later, Comex. See you later, CME Group. See you later, Sears Tower. The whole thing. Oh, we had a bunch of gold there too. Shoot. Man, Al-Qaeda. Bin Laden came back from the dead and struck another key critical place in America. Darn it. Man, those pesky Al-Qaeda seem to always benefit the banks majorly. So is it damn Al-Qaeda or hey, thanks Al-Qaeda as far as the banks are concerned? You can't argue with proof and facts. Major investigations were going on all the big name banks that I've already mentioned, including the Enron scandal, including the WorldCom scandal, including some other things that were being stored in those World Trade Center buildings. I believe, namely, World Trade Center 7 mostly, which was that building that also did not get hit by a plane and fell straight down. Nothing was sticking up, just a pile of dust and hardly anything left. And all of that investigative material into those big corporations I just told you about and scandals. Have a nice day. Can't investigate what's not there, can you? Nope. So again, did Al-Qaeda do damage or did they help? To us, it looked like they did damage. They killed some people. They brought these buildings down. That's a slap in the face in the world trade. It's a world building icon. But to the bankers, they're sitting back with like a fat cat. Whew. We don't have to deal with Enron scandal anymore. WorldCom's gone. The banking stuff they were investigating, all that's gone. Let's do it again, guys. We get a fresh hand dealt to us. Yeah, all right. And they did. They got a new hand, a new life. Let's not just say, okay, we got busted. We just caused this terrible catastrophe. Let's get the hell out. Not do this again. Learned our lesson. Oh, no. We just leveled the playing field again. And now, because we've seen how that works, we can do it again. And if we ever get caught again, we'll just demolish the building somewhere or do something again. And since we know we can do that again, let's go balls to the wall and really rape and pillage the world. And then when they catch on, we'll collapse the whole system. That's what I'm talking about. Anyways, that's all I got for you tonight. Hope you've enjoyed. I'm leaving the green screen because I don't have time to edit and play silly little games right now. Gotta go spend some time with the wife. Take care.